Hello everyone, I am Pratap here. We are at lesson 30.3. It is about a sideways trade acceptance checklist. And this lesson is having dependency on the earlier lessons. In case, if this is your first visit to our channel, please note we are providing complete free training on supply demand zone price action. You can access all the earlier training lessons at our NeoStock YouTube channel. To access all the training lessons at our channel homepage, click on the tab Posts. Some of you might be seeing Community tab. In that case, you click on the Community tab. Then also you get the same post. And this post is having a YouTube playlist link that is having all the training lessons. You just click on the link. Now you can access all the earlier lessons. Now we are learning a lesson 30.3 video, and until lesson 30.2 all the training videos are available. But you need to start, in case if this is your first visit, you need to start our training from lesson 1.1 that is available at the bottom of the page. And starting from this lesson, all the training lessons are placed in an order. So please go through all these lessons one by one, and then you get into lesson 30.3 video. And also I provided all the training instructions at our Telegram channel. You can find the link to our Telegram channel in this video description, in the old messages at our Telegram channel, or even in the pinned messages you can find the training instructions. Learn the course according to the training instructions, then it will be helpful to you to become a very good independent trader. Okay, now let's get into lesson 30.3. It is about sideways trade acceptance checklist. And this checklist for sideways trade setup is almost similar to the concepts that you learned in lesson 20. That's why I recommend all the members, first you complete lesson 20 checklist items. Because almost all the checklist items except a couple of checklist items are changed in sideways trade setup. And remaining are almost similar. So that's why if you complete lesson 20, understanding this lesson 30.3 video is very easy. And also you should understand lesson 20 checklist items are primarily designed for bullish and bearish trade setups. But in sideways trade setup, couple of changes are there in the checklist items. That's why you should learn these checklists once again. Okay, let us quickly go through all the checklist items. The first checklist items is about checking the number of base candles in the entry zone. You might be going for sideways long trade setup, or you might be going for sideways short trade setup. Whichever the setup, long trade or short trade, the entry zone, if long trade entry zone is demand zone, if short trade entry zone is supply zone. Sideways long trade setup or sideways short trade setup. So that's why the entry zone, the number of base candles should be less than or equals to 6. More than 7, more than or equals to 7 candles, success rate is very, very less. That's why we are avoiding these zones. That means this checklist item is almost same as what you learned in lesson 20. So that means for bullish or bearish trade setups or sideways trade setups, this checklist is same, no difference. Okay, next checklist. And before that, if the base candles are more than 6, reject the trade. If it is less than or equals to 6, then go to checklist number 2. Don't go to the trade. Don't accept the trade. Now you should go to the checklist 2. Otherwise, you can reject here itself. We need not verify the remaining checklist. If base candles are more than 7, no need to go to checklist. You can directly reject the trade. That is what you should understand the logic here. The logic is same for all the remaining checklists. Checklist 2. Is the strength of the entry zone's leg out is sluggish? You already learned zone strength in phase 1 training videos. You have learned different strengths like high explosive or gap or pro gap, or you have follow through candles, no follow through candles, and sluggish. So if it is leg out is sluggish, the strength of the leg out is sluggish, immediately you have to reject the trade. You should not accept. And go to checklist item 3. But note, this sluggish nature is not applicable for high liquidity zone strategy. Suppose if the zone is high liquidity zone, you are using it for HLQ zone strategy that you learned in 21.3 video. Even though this is a sideways trade setup, let us assume the zone is supporting near demand or supply zones, high liquidity demand or supply zone, that is daily or 75 minutes. Or if it is forex, probably it is a 1 hour or 2 hours candles. So you want to plan your HLQ zone strategy. Even sluggish also we will allow. But only sideways trade setup or bullish or bearish trade setup, you have to reject the trade. Because HLQ zone strategy is only for intraday point of view. But the sideways trade setup can be supported for monthly income trade. It can be supported for weekly income trade. It can be supported for daily income trade or hourly income trade. So that's why for the income trades, this is very, very important. For high liquidity zone strategy for daily or 75 minutes time frame or forex or crypto or even commodity trades, 1 hour or 2 hours you will be using. Okay, anyway, now we are focusing on sideways trade acceptance checklist. If the sluggish, reject the trade, otherwise go to checklist item 3. And what about checklist item 3? Is the entry zone is having a zone achievement as a violated opposing zone, VOZ. If the zone entry zone is not having the zone achievement, you just reject the trade. Otherwise go to checklist number 4. That's why if you would have observed when I am generating reports from NeoStock software strategy builder, I am checking violated opposing zones. If they are satisfied, then only I am filtering. Otherwise those zones I am rejecting. That means in the strategy builder always I am checking zone achievement as VOZ, violated opposing zone. Okay, then checklist item 4, assume the zone is having a VOZ zone achievement. Then go to checklist item 4. What is checklist item 4? This is a very, very important. Is the entry zone having a fresh fine-tuned 5-minute zone? It is very, very important, not for trade planning point of view. Don't think that we have to take a trade in the 5-minute zone. No. You may take a trade at 15 minutes zone level, or you may accept the trade at 75 minutes entry zone level, or you may accept the trade even at a daily entry zone level. You need not go up to fine-tuned 5-minute zone. When we don't go up to fine-tuned 5-minute zone, why are you verifying the zone is having a fresh fine-tuned 5-minute zone? Why? What is the reason? The reasons I explained in lesson 16.2 video. In lesson 16.2 video, I explained a concept called when a zone can be violated. Well, before taking the trade, you may find maybe this zone, there are higher chances of zone violation. When a zone is having higher chances of zone violation, if a zone is not having a fresh fine-tuned 5-minute zone, for that purpose we are validating this checklist. Don't think that you have to plan your trade in the 5-minute zone. Sometimes prices may not be reaching fine-tuned 5-minute zone. Maybe they may reach at 15 minutes level zone and prices will be moving. Or sometimes they may not reach even 15 minute zone also. They may reach up to fine-tuned 75 minute zone. And then prices will be moving. So that's why where you have to plan the trade, where exactly your entry, that is depending on your other analysis and risk management. But need not be based on a fresh fine-tuned 5-minute zone. Need not be. Sometimes you might be missing the trade if you plan the trade at fresh fine-tuned 5-minute zone. But still we need to find whether a zone is having a fresh fine-tuned 5-minute zone to confirm whether the zone is having a chances of zone violation or it is not having chances. I mean higher chances. If a zone is having a fresh fine-tuned 5-minute zone, I repeat, if a zone is having fresh fine-tuned 5-minute zone, there are higher chances of getting success. I'm not saying the zone will always give 100% success. Higher chances are there. When the zone might be failed, even if fresh fine-tuned 5-minute zone, maybe institutions might have cancelled their order flows because of some XYZ reasons. We may not be knowing. At the time our trade will be stopped out. We have to accept that. But it won't happen every time. Rarely that happens. But many times if a zone is having a fresh fine-tuned 5-minute zone, there are higher chances prices will be moving away from the zone once they reach the zone. So that's why checklist 4 is very, very important. This is about confirming a zone violation, not for taking the trade. Suppose your risk management is very high, at the time you may take a trade at fine-tuned 5-minute zone, risk management point of view. If your risk is managed at 15 minutes level or fine-tuned 75 minutes level, you may take a trade at once the price reaches the fine-tuned 75 minutes, you take the trade. Because you don't want to miss the trade. Sometimes price may not be reaching fine-tuned 15 minutes level or fine-tuned 5 minutes level. They are all depending on your trade planning. But this is about confirming whether a zone can be violated or higher chances of getting success. For that confirmation, we are depending on the checklist item 4. I hope you all got the clarity. Okay, suppose it is not having a fine-tuned 5-minute zone. What does it mean? There are higher chances this zone might be violated. When the chances are very high, why do you want to plan a trade? That's why we reject the trade. Otherwise, can we accept the trade? No. Still you need to go to another checklist. That is, you should go to checklist item 5. If all checklist items are passed, then only you will be planning the trade. So, what is checklist item 5? It is about the risk reward. From your entry zone till the target zone. Basically, it's not really entry zone or target zone. In your trade plan, where exactly you are planning your entry, till the entry and till your target, that is the target zone. Minimum risk reward should be 1:3, a minimum. Of course, highly experienced people may accept 1:2.5 also, but for all our members who are learning these concepts, minimum risk reward should be 1:3. If minimum 1:3 is there, you can accept, otherwise you have to reject the trade. So if it is satisfied, yes, you can accept the trade. Then you go to the checklist item 6. So what is checklist item 6? Is the maximum accepted risk within the 2% of the trade capital or not? That is with or without position sizing. Sometimes if the risk is beyond 2%, you may do position sizing and you limit your risk within the 2% level. Even after doing the position sizing also, it is not in your control. At that time, you have to reject the trade. So, with or without the position sizing, if it is 2%, you can go to the next checklist item. Otherwise, you have to reject the trade. Suppose if it is no, you have to reject the trade. If it is yes, you are able to manage whether with or without position sizing. The risk is within 2% level. Then what you can do? Can we plan your trade? No. You have to go to the next checklist item. Go to checklist item 7. And the checklist item 7 we can see a change now. It is different from what you learned in lesson 20. What is that checklist item? It is about sideways decision making table. Earlier you have seen decision making table in lesson 20. That is bullish or bearish decision making table that you learned in lesson 14. Lesson 14 you learned bullish and bearish decision making table. But now we are in lesson 30.3 video. Lesson 30.1 and lesson 30.2 you have learned sideways decision making tables. Lesson 30.1 long trade setup. Lesson 30.2 short trade setup for sideways trend. So those decision making tables you have to refer. So please remember, you should not refer lesson 14. You should refer lesson 30.1 and lesson 30.2, the sideways long and short trade setup decision making tables you have to refer. And those decision making table rules, at least one of the rules does not satisfy. So not even one rule satisfies. Then you have to reject the trade. Suppose lesson 30.1 long trade setup or lesson 30.2 short trade setup, one of the rules are satisfied. Then go to the checklist item 8. Checklist item 8 is the last checklist item. So what is checklist item 8? And that is also different from bullish bearish trade setup and sideways trade setup. That means checklist item 8 is different from lesson 20. So what is the difference? Okay, lesson 20 we verified odd enhancer score greater than 12 we discussed. But now odd enhancer score should be greater than or equals to 11. That means 1 point we reduced here. Bullish or bearish trade setup, the minimum value should be 12. But sideways trade setup, the minimum odd enhancer score should be 11. Why? Why one value is reduced? Because of EMA confluence. EMA confluence cannot be used for sideways trade setup, because sideways trade setup EMA does not make any sense. That's why we removed that EMA. Because we removed EMA, now your points will be up to 11. Instead of 12, 11 we are verifying. So this is the second difference. So is the entry zone odd enhancer score greater than or equals to 11? If it is no, reject the trade. If it is yes, then can we accept the trade or next checklist item? There is no next checklist item. This is the last one. Total we have 8 checklist items. If this is yes, then you can plan the trade. I'm not saying you have to take the trade. You have to plan the trade. Trade planning. The trade planning I clearly explained in lesson 29, one of the videos in lesson 29 series. So according to that video, trade planning video, what I explained, that way you plan your trades. So this is what the checklist items you should refer for sideways trade setup. Hope I made it clear. Next video, let us look into examples, detailed examples, and more examples we will discuss. Hope the information in this video will be helpful to you. Thank you all for attending this video. Let us all meet again in our next video. Thank you.